So for our trading tip for you to have a look at for today, we're going to look at XLV, which is the ETF that is related to healthcare. We've been around this sort of $68 level. You'll see this pivot high at 68.10 previously, early part of the year. So most of January was up around this level, trading between a relatively wide range for this particular ETF, between $66 and $68, but really failed to break 68 with any conviction and subsequently dropped off throughout February. Not helped by Hillary Clinton's comments, of course. But if we look back at this stock now, and we look at our three time frames of the daily, the 2-day and the weekly chart, which we usually look at for short-term equities and options trading, we do see the planets potentially aligning if there is a breakout of that 68.10 level. We would probably move it in terms of our entry criteria up to around 68.30 and make it a last hour trade to make sure that we've actually cleared that particular level. But if we note that we've been in uptrend for the last 8 sessions, almost a ascending triangle type pattern on this, and the last 5 sessions we'll have another big green bar there. Good volume on this last session has pushed it right up towards that $68 mark. So green trend, green heat map and green volume on the daily chart. If we look at the 2-day chart, we're in congestion. We're likely to move up out of congestion into uptrend on the 2-day, and there'll be green volume there. And as soon as we do that, we'll see this heat map turn green. So that pivot high is going to be read by the Hawkeye algorithms and push that up into uptrend. And likewise on the weekly chart, we see a classic potential reversal on the slowest time frame. Remember what we look for. We don't look at the heat map, but what we look for is this slowing down of the downtrend that's crunching up, and it's starting to tilt upwards. And there we've got, over the last 2 weeks, 2 bars of buying volume. And certainly with the bar, with the price pin at the top of the bar, we expect that to be the same for this week, should we remain at this level. In terms of an entry criteria, 68.30 I've already referenced. Regarding strategy, there's 2 ways to play this. We see a move up in the first instance to $70, which would take us up to these previous pivot lows that were broken at the turn of the year, but potentially as high as $62 or $63 if we challenge that level. So we'll go a longer term bought call with this possibly, or even a bull call spread perhaps at 69.70. So that's how we would play this as a particular trade for today. Obviously, for those of you in the Hawkeye options membership, should we enter this, we would go into the exit criteria for this. But I hope that's useful for today, and trade safe and be cautious. This market remains fragile for now at this level. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.